Hi everyone, Jeff Roney here from Keller Williams Realty Syracuse, talking to you about the Central New York real estate market. And a really hot topic right now are interest rates. Of course, they're higher than they were a couple of years ago. However, if you look at them historically, they're pretty much in line with historical norms over the last 30 years. Now, of course, nobody wants to hear that. All they're concerned with are what the interest rates are today and the fact that they're higher than they were before. So what can you do about it as a buyer? Or what can you do about it as a seller? Or what can you do about it if you're a seller and a buyer? There are some strategies and some tactics that you can employ to lower your interest rate, and that's what I'm going to talk about briefly with you today. So here are 3 key points. Number 1 is to boost your credit score. If your credit score is really not what you would like it to be, if it's a little lower than it could be, this is something to focus on. A higher credit score will translate into lower interest rates in most cases. For lenders, they view it as less risk when someone has a higher level of credit worthiness based on their credit history. So to improve that credit worthiness, ensure that you pay your bills on time. Also, manage your debt appropriately and correctly. Scrutinize your credit report. Sometimes there are mistakes there, and limit your applications for new credit, especially if you're in the middle of a mortgage application. Don't go out and buy a new car. Don't go out and buy an expensive item that's going to up your amount of indebtedness at a very crucial time. So work on that credit score. The higher it is, the better it's going to translate into your lower payments and better interest rates. Number 2 is to compare lenders. They are not all the same. Different lenders do offer varying interest rates and also terms. Closing costs can be very, very different, and closing costs are part of what gets figured into your actual annual interest rate, also known as APR. Make sure that you request quotes from multiple sources. Do side-by-side comparisons with good faith estimates of closing costs. Understand what your options are, and don't shy away from negotiating for a better deal. Sometimes you can definitely get better interest rate or better terms or both by doing a little bit of negotiating. Another tactic that's really popular right now, which is part of dealing with lenders, is looking at buy downs on the interest rates. It's possible that you or even the seller of the home that you're buying could put up some money or give you a credit, or you could pay for it yourself to buy your interest rate down, in effect lowering your payment. You could lower your payment for the life of the loan potentially. You could also do what's called a 2-1 buy down, where you could have a lower rate during year 1 and 2, and then it'll go to the rate that it would have been if you didn't do the buy down in year 3. So it's something to look at and can really help you, especially on the front end, get in for a lower monthly payment. Advice point number 3 would be to increase your down payment. The larger the down payment, the less risk for the lender. That can lead to a lower interest rate. So start saving aggressively. If you haven't saved a lot of money, consider windfalls or possibly a gift from a blood relative, and explore available down payment assistance programs to help you with your down payment. The larger the down payment, less risk for the lender, and maybe a better rate for you. So I hope this is advice that helps. If you have questions about this, because I know it can sometimes be confusing, don't hesitate to contact me. I'm always here to help. Jeff Roney with Keller Williams Syracuse. Thanks a lot, and we'll see you next time.